Give it a minute here. A couple more ladies, see, logging in. All right, let me make sure we're recording. Awesome. All right, ladies, welcome to our very first market and mindset call presented to you by Sophisticated InvestHER. I am so grateful for those of you who are logged in listening live, and for those of you who may be watching this at some point later. This call is an empowerment call for our investors, and we want to make sure that we are helping one another on this journey to building wealth. This call will usually be only about maybe 15 to 20 minutes, just a weekly check-in, see how the market's doing, answer any questions you may have. We'll cover the stock market, the Forex market, and the cryptocurrency market space, and really just talk about the mindset that we can all have as investors building our legacies of wealth. So for other ladies that you know, feel free to invite them for next week's call. We'd love to have more and more ladies each week. My name is Charnell Sutton. I am your host for this call. I actually launched the Sophisticated InvestHER movement, and I'm just excited to be able to share in some of my knowledge with you, and also in the future bring in other people who specialize in different areas of investing and even mindset training. So make sure you tune in each and every week. I will usually try to put out what the call will be about, but even like today, I already put out what the call was going to be about, and then something happened in the market today that really fed right into the topic for this week, which is block out the noise. Okay, so block out noise is what we're going to cover tonight for our mindset portion. And so we always want to touch base on the current state of the market. If at any point you have questions about anything I'm going over, or even just something completely different, feel free to put it in the chat box. I'd love to address those questions. Okay, and even whether it's tonight on this call or future calls. So what happened today in the market? This picture right here shows what happened today in the market. And it was a very dramatic move. It happened at around 3 o'clock in the afternoon, just a few short, well, about an hour, but a few short minutes before the market was due to close. And it sent people in a frenzy. And when I say block out the noise, this was I couldn't have asked for a better event today. So as you can see, this is just from today. This was the Dow Jones industry average chart here. And this was the Dow Jones worst point drop ever. It dropped almost 1,600 points today. And then the buyer stepped in, tried to help recover some of the market, and it still wind up closing at almost about 70% of what it had dropped to earlier. So what does this mean? What is the Dow Jones? And, what does this mean for people who are currently in the market? Well, that's exactly what I want to talk about, because clearly the current state of the market this week, so we're in week 1 of February 2018, and really for the last almost year and a half, there's been no real noise in the market. And so people haven't really had to panic about anything. And so this was definitely a shock to a lot of people's system. So let's talk about the Dow Jones and the history of it. So this is a chart of the Dow Jones. This was showing maybe about the last almost 40 years here. And the Dow Jones is not something you actually trade. It's an index that people use. So if people say, oh, the market's up or the market's down, they actually are usually referring to the Dow Jones. So you can see here, the Dow Jones has actually been around since 1896. And it's actually a collection of the top 30 stocks and indices in certain industries. So it is basically saying, these are the companies you should watch. These are kind of the market makers. These are the ones who set the trends. These are the ones that matter the most to kind of give you an overall picture of the current state of the market. And so as you can see here, it has the dip here on March 6, 2009. That was its lowest point from where it had been rising since, around 1995. Okay. And of course, we know what happened in 2009. That was a big crash period there. But here's the interesting thing, as you can look past 2009, is it's pretty much been on a nice steady increase through 2015. Had a little bit of some dips and drops. And then for the last almost, year and a half or so, it's been pretty much going straight up. So if you think about it, for those who maybe are new to investing, who have been watching some of these stocks and things, they haven't had to deal with the market correction. And so that's why a lot of the panic set in today, because look at some of the companies involved with this. These are the 30 companies that are currently a part of the index. So, companies like Apple, Disney, McDonald's, okay, Verizon, all the companies you hear about all the time. These are what are setting the trend of how we say, okay, the market is good, the market isn't doing so good. And these were actual companies that were impacted, and the Dow Jones was just a reflection of some of these stocks being impacted negatively. It's really important, though, that we understand that the market can't just go straight up forever. And so when you have these long time spans of no real retracement, no real correction, whatever the wording people may use, we usually don't understand what that means, and people tend to freak out. This is when people want to go and they want to grab their money. And, if they use this as a guideline for how they invest, they're probably invested in, maybe half of these companies. So if that happens and their portfolio takes a huge hit, most people panic and they don't know what to do. And I have a feeling that this week, when something like this happens, it doesn't just go away. This is a very, very dramatic move, to the point where it's not just going to recover and bounce back. The Dow itself had actually been dropping over the last couple weeks, and this was just something that was just coming, and nobody expected it to be this dramatic. But it's not just going to bounce back up and continue to rise from where it was. I predict that it's probably going to continue to fall this week. And who knows at what rate, maybe it'll just come back down to the point where it fell initially. I don't know. But does that mean that you go now and take all your money out? Absolutely not. So I wanted to show this as well, because this is kind of what I was saying, as far as, say you got over whatever happened in 2008, 2009, and you decided you wanted to get back in. Well, what most people who have been in since that time period, what they've experienced is pretty much total growth. I mean, the stock market itself has gone up over 8 times since this low point in 2009. So that's an 800% return that people could have had by now, based on just growth over these last few years. So when something like that happens, and look at this dip here, it just actually hit a market peak of $26,616.71 last week. And you can see that very, very sharp dip that it took today. That is pretty tremendous. But at the same time, look at it in the grand scheme of things. Look how the market has been going up, even in the last year, from 20,000, up to this $26,000 point, and it only came down to maybe about 23,000. So it's still a nice, healthy retracement. But what people are saying is now we may be on the edge of a correction, which means it could be more of a bear market for a little while, which means it could continue to go lower. Most people now wonder, okay, well, what caused this? Is something wrong with the market? Is our economy bad? And honestly, there's a lot that you can speculate about. People are worried about the bond market. People are worried about inflation. We haven't seen much inflation for like 8 or 9 years. They're worried about interest rates hikes. So we're scheduled for like 3 this year. There may be more. It could be more, drastic or dramatic than we're thinking. So there's a lot that people are looking at the different parameters and saying, you know what? I'm going to go ahead and sell off, or I'm going to take my money out of the stock market and put it in the bonds. And so there's all kinds of things happening that cause these kinds of dips and corrections. And, so we'll see kind of as this rest of this week plays off in the next few weeks, if this is truly a correction. So definitely, tune in next week, because I want to follow up with this, and let's talk more about what happened the rest of the week, because it's going to be really critical. And it's a really good thing for us to see as we're talking about how do we set our mindset when something like this happens. When this happens, and say you had money in these stocks, like I said, you can't invest directly into Dow Jones, but this is an index of some of the top stocks that a lot of people have money in. So what do you do? What's your reaction and your response when this kind of drop happens? What's your reaction? And the biggest thing to make sure that you have under control is your mindset. This deals with your emotions and, how often you're even looking at your stocks and your investments, whether that's in Forex or cryptocurrency, whatever that is, how are you managing your mindset? How are you blocking out the noise? There's two different types of noise. There's external and there's internal. I'm gonna tell you something. This right here is external noise, okay? External noise right here. But this is the market. The market moves in waves. It goes up, it goes down, it goes sideways. It goes down fast, it goes up fast, it goes sideways. So what do you do when that external noise shows up? What's your response and your reaction? What's your immediate response? But then what do you actually do? Because some people's immediate response is, there's going to be some fear involved. There's going to be a little bit of emotion, maybe some heart sinking, right? But as long as your action isn't always, let me run and get all my money out, or, I knew I shouldn't have invested in that, and then you're angry and it messes up your whole day. I'm pretty sure there are some people today who have no clue about what the Dow Jones drop means, and they're probably impacted by it. It might be the first time they've looked at their own investments in months or even years, because they've been smooth sailing all this time. So it's really important that you stay attentive to your investments and that you block out the noise in the different swings of the market. All the radio programming, all the media on TV, all the news articles and blogs, there are experts. If you need to find someone to tell you exactly what you're looking to see, they're out there. There are so many experts and so many people who have an opinion. You have to block out the noise. You need to be involved enough that you understand the movements and swings of the market, and then make sure that you can separate your feelings and emotions and what people are saying, and sometimes even the fear that's invoked from a lot of these different sources, from your actual plan. It's really, really important that you remember your plan and that you stick to it. And then, of course, there's internal, right? So we have our own internal person or people. We have our own internal thoughts and feelings that it's even harder to block out. So, maybe you just turn off the TV, you're not looking at nothing else, you're not going to Google nothing else. And, that's how you're going to block out the external noise. But then internally, if you keep checking your P&L sheets, and you are, constantly getting texts or updates on your phone about things. And then, what are you saying to yourself when this stuff happens? And so really put yourself in these people's shoes, and if you've ever experienced this before, or how about those who were in 2008 and 2009, and maybe you're one of these people, and then something like this happens today. Do you get flashbacks of that 08, 09, all that mess that happened and all the people's lives who were destroyed, or, who did not recover from that? Or do you just treat this as, what? It's been 8 years. Let me just relax. Let me just see how the market rebounds, or let me see how these next few weeks go, and I'll make an educated decision when my emotions aren't so involved. Sometimes we have to silence that internal voice, because that noise is a lot louder than what the people on TV are saying. Even though that can have an impact, if we have these past memories or experiences that are negative, maybe there's a bad advisor we worked with, or maybe there was a stock that we invested in it took the same kind of dip and never recovered. All these things, we really have to block out what those voices are saying in our head and stay focused again on our plan and our mission and our overall, why we are doing this. And that's kind of the biggest thing about mindset for block out the noise. When the noise occurs, when these big, huge market swings happen, even if the swing was the other way, what if it shot up? Same thing. You don't want to get overly excited because it could be right back where it was the day before, just like this one might do. So remember your why. Why are you investing? What are you building towards? What kind of legacy are you trying to leave? Stay focused on, okay, I didn't plan on touching this money for 5 to 10 years anyway. So stick to your plan. Don't touch it. Leave it alone. See how things recover, monitor it from a distance. The beautiful thing about the stock market, and no matter what kind of dip it's ever had, even in the crashes, it has always come back. It's kind of one of those things where it has always come back. And, who's to say that this time next week, it won't do the exact same. So stick to your plan and continue to educate yourself on the facts. So, it is good to use some of these online sources or these trusted, investing personalities or even books, podcasts, YouTube, whatever it is that you like. But make sure that you're using sources and people that you can trust and that aren't using a bunch of hype and language to just try to rile people up or instill fear. Investopedia is great for just kind of basic vocabulary and understanding things for all markets, really. And I love investopedia.com. So that's definitely something that you can utilize. It has a lot of stuff on the Dow Jones and the history of it. And the more that you become involved and educated with the facts, then you will look at that chart that I showed with the almost 1,600 point drop in a matter of seconds and say, you know what? This looks like it could be the beginning to a potential correction. But you know what a correction is? It could be a reversal or just a general change in the market, but it usually could just be a retracement, which means it's going to then continue on in the direction it was going. It's natural for this kind of stuff to happen. And those are the kinds of ways that you can help to block out the noise and control your internal voices, the more educated you become. And also, don't respond or react to every market swing. As we said before, the market can be going up, it can be going down, it can be moving sideways. Some people get anxious when it's in consolidation and it's moving sideways. Some people get, too overly excited when it shoots up and then, it's back down the next day, or, same thing if it drops to the floor and maybe it stays down for a few months. You can't respond to every single swing. The purpose of investing is more of a long-term solution to building wealth. Now, for you, that might be 5 years, it might be 10 years. You may still be on the more traditional kind of 20 to 30 year path. But overall, if you're impacted by this, whether it's the Dow Jones or it's a Forex trade or it's Bitcoin, understand that you can't react to every market swing. A lot of times people will see this as a point where the stock is on sale, right? So maybe they looked at some of those individual companies that they have and they own, and they go and get some more. They re-up. Same thing with, Bitcoin or and any other stock or currency that is in a current point that is at a lower point than price that it's been trading at. It seems to be on sale. And maybe that's your approach and that's your plan. As long as you are remembering your why, sticking to your plan, making sure you're educated on the facts and not responding to every little thing the market does. We can't predict 100% where the market is heading to next. We can do as much technical analysis as we like. We can try to anticipate all the fundamental announcements that may make the market move. But we never really know. Sometimes it looks like it's dropping and then it shoots up. Sometimes it looks like it's going up and then it decides to consolidate. So you can't respond and react to every single thing that the market does. You just have to kind of take a step back. Maybe you zoom out on the chart a little bit. You take a look at overall where you are. And, because even with this dip, a lot of people are probably still in profit. It was a big hit for the day or for the week or for the next few months, but a lot of people are probably still in profit. And if people just got involved you know, they also have to kind of withstand the swings of the market and kind of make sure that they're separating their emotions from their original decisions on why they got in the trade or bought that stock. And then, of course, be a sophisticated investor. And really, that's a summary of everything that that I just covered here. It's just more so being more knowledgeable and behaving and carrying your investment strategies in a way that you're not fazed by every single little thing, and you're not fazed by you're not responding and reacting the way the average trader does. You see that as an opportunity. You see that as room for growth, or maybe even room in a moment in time to learn more about something. You know, even with this myself, I went and I knew, you know, enough about the Dow Jones market, but this move itself impacted the Forex market and the cryptocurrency market. And so that took me to do some more research and do a little bit more digging and learn more about, you know, how everything is really tied together and why these things responded together. So continue to learn and grow and apply your knowledge as you're on this journey as a sophisticated investor. All right, ladies. So that is your market and mindset for this week. Like I said, we'll do an update on this Dow Jones drop next Monday. I'm anxious to see how this plays out the rest of the week. And, you know, just remember, block out the noise. This is a marathon. It is a journey worth being on. And hopefully this has been helpful for you in understanding a little bit more. If you have any questions, I'll take a minute to read over those now. You can submit those in the chat. You can feel free to send me those questions throughout the week. And if we get time, I will definitely address them on some of these calls. Awesome. Yes, thank you. Thank you. Thank you for being on. Appreciate it. Glad this was helpful. Well, no questions right now. Appreciate you guys. All right, ladies. Well, hey, we will be back next week. If you found this helpful, share this call. Tell other ladies that you know. You can find us at Market and Mindset. And we're just excited to be a part of this. We do have a Facebook group, so make sure you're plugged in under Sophisticated InvestHER. And we'd love to hear you on the call next week, Monday night, 9:30 Eastern. Have a great night, ladies.